As China's yuan has been devalued several percent against the US dollar in 2016, we look to 2017 and expect it to continue. As a result, China has decided to initiate more strict capital controls while claiming this isn't capital controls. There is also the suggestion that China may increase its sales of US Treasuries in 2017 in order to keep the yuan from crashing. You came here for the truth, so let me unveil that for you. Let's look at this today, this situation involving particularly China and the US. Turning over first to this article out of the Global Times. China's new rules on cash transactions and overseas transfers are not capital controls, an economist with the central bank said, dismissing concerns about tightening restrictions on capital outflows. I do believe that's exactly what's happening, and they're simply just covering it up. Let's just briefly cover what has happened. Banks will be required to report all yuan-denominated transactions exceeding 50,000 yuan, that's about $7,000, to the People's Bank of China, down from the current level of 200,000 yuan. This is the kind of thing you see all over the map. You just see this tightening occurring. You're not able to transfer externally anymore. You start to see all different sides tightening on you. It's not just one very obvious thing. It happens sort of little steps. Cross-border transfers of more than 200,000 yuan by individuals will also be subject to the report process. In terms of foreign currencies, the report threshold remains the equivalent of 10,000 US dollars for both cash transactions and overseas transfers. And basically, they're trying to impose, as they say here, trying to impose capital controls in a disguised form, and I do believe that is accurate. The government realizes that there is capital outflows that are occurring right now, and they are trying to slow that down. And they do so, this is not the first time this has happened. They sort of, go in the seesaw action. A little bit here, a little give and take. All right, so let's move on here to the next article. It's all interconnected here. Ma's comments, this is not Jack Ma, of course, it's an analyst, I believe, follow the annual January 1st reset of the $50,000 limit for individuals, which may potentially aggravate capital outflow pressures that have been intensifying after the yuan suffered its steepest annual slump in more than 2 decades. So this is what has been happening. As of January, they're allowed to take out $50,000. And this allows them to basically get it out. And that's what they do. So at the beginning of the year, you tend to see that. However, it seemed to have been a different situation. I'm going to forward ahead to this article. The yuan shed nearly 7% against the dollar last year. Its poor showing since 1994, as policymakers struggled to contain capital outflows and preserve foreign exchange reserves in the face of a slowing economy and resurgent dollar. One of the things that was interesting about this article was basically it said that not as many people were selling as they expected. So we'll see, though, it's very early in the month of January. Let's see how that really all plays out. Let's go back to this article here. This is key, I do believe, because ultimately China holds the US in the palm of their hands. I believe this is very, very powerful. This is a currency war that has been going on, not just on one side. I do believe that this is double-sided. China may further sell US Treasuries in 2017 if needed to keep the yuan's exchange rate stable, the people said, adding that the size of the reduction will depend on the capital outflows and market intervention. So, of course, how China responds to that, and maybe they're going to have more of the interjection by the central bank. Maybe they're going to have more of the bailout type schemes. We've seen it all take place where they intervene. How they intervene, How much they intervene will determine whether or not they are going to continue selling off US Treasuries. In 2016, we saw that occur, but they obviously have a massive pile of it. It's not something that's going to happen overnight. The nation's holdings of Treasuries declined to the lowest in more than 6 years. In October, as the world's second largest economy used its currency reserve to support the Yuan. This is something that has been going on over the years. It's nothing new. It goes up and down and up and down, but it is the trend which we need to watch out for. I always say this. Look, it's not important if they sell just a little bit today and all of a sudden everyone panics. No, but if that trend continues month after month after month, we start to see that. We start to really be able to take those inferences and begin to sort of plan ahead. China's currency stockpile has probably shrunk further after hitting a 5-year low of $3 trillion in November, according to the median estimate. This here is, in fact, a large number compared to any nation that you look at. $3 trillion really shows the significance of China's holdings, and they have the power now. I believe it is well over $1 trillion just in U.S. debt. So they can really do damage to the U.S. should they choose to. Let's move on here. Southeast Asia's worst performing currency of 2016 is in for another tough year, with the president of the Philippines spending plans boosting imports just as rising interest rates spur capital outflows. The peso in the Philippines is suffering right now. I thought it would be important to see that. This tends to be good, though, for exports. So look to the Philippines over the next, let's say, 6 months and try to tie that in all together with how it works for their imports and their exports. I'm going to keep covering that. I think that would be an interesting thing to look at, because this is, as I've said before, similar to what another peso, this time in Mexico. As you saw that back about 2 decades ago, saw what they did. Swedes looking forward to a 6-hour workday just got some bad news. The cost outweighed the benefits. So basically they did a 2-year experiment where they had these individuals working at a 6-hour time frame. Unfortunately, what happened in this case, they had to actually hire more staff. It cost more money. It said, though, that they basically lived better lives as a result. They were sick less, they were healthier, but it did cost more. So it goes to show you that there is definitely a trade-off there. They need to increase efficiency somehow, but this was an experiment. I thought it was interesting to show you what exactly happened in this very, very limited experiment that went on for about 2 years. Venezuela right now, obviously it's suffering. Obviously they have the hyperinflation. Look at this. The military taking over the food supply. The military taking over the food supply. But if you want food from an alternate source, not the military, don't worry, it's available for you, and all you have to pay is 100 times the government set price. That's right, you're going to get it from the black market, no worries, but it's going to cost you 100 times more. If you're in Venezuela, I don't want to tell anybody what to do, but if I was there, I'd run for the hills. All right, and last but not least, Amazon's robot army grows by 50%. Robots, actually, it's pretty amazing, the efficiency here of these robots. It's amazing. They're like rats running around. There's so many of them, in 45,000 of them, in fact, in just 20 fulfillment centers. So the individual, instead of having to go, if you watch the video here, instead of having to go walk down this massive warehouse, find that item, pick it off the shelf, bring it down, the robots automatically bring them all to the individual, and there's different shelves here all marked. They take that, they just reach their hand in, grab it, and put it in the box. Eventually they'll figure out a way for this all to be automated, but at this time the efficiency is insane. It is showing you that, in fact, ultimately these jobs, although they are increasing because Amazon is expanding as a company, I do believe in the long run there's going to be some major job losses in this field. If you found this video informative, please give me a thumbs up. Last but not least, if you found the video informative, I know you will find my book, The Money GPS, even more informative. I've taken this very complicated subject and made it easy by using charts and diagrams. If you want to look through the book, you can actually head over to Amazon, where they have a look inside feature that will allow you to flip through the pages of the book and see if you like it. Take care. I just wanted to say hello to all of the new subscribers out there. There has been a recent surge in the subscribership here on the Money GPS. Hello to each and every one of you. I just wanted to let you know that on this channel, it's a little different than what you've seen before. Any suggestions that you make, I actually turn them into videos. When you comment below, I actually read those. I actually reply, not to every single person, but basically I try to get as many comments as I can replied to within the first day or two, and then basically I have to move on to the next videos. There's just simply just too many. So wanted to let you know that, and never stop commenting, never stop giving me those thumbs up, thumbs down. If you don't like it, give me a thumbs down, and that's all for this video. Take care.